How's it going, everyone? This is Nick. I am back here with another Reventure Consulting YouTube cast where I'm bringing you guys data from all over the US on different real estate markets, helping you make better decisions when it comes to buying homes and investment properties. So today we're going to take a look at a market that gets very little fanfare, and that market is San Antonio. San Antonio just manages to slide under the radar. Not a lot of home buyers and real estate investors pay attention to it, even though it has a lot of really solid fundamental aspects to it. For one, San Antonio has pretty good job growth. Not great. It's not at Austin levels, but it's still good job growth. Probably most importantly, it has good affordability. You can actually afford to buy a home in San Antonio if you're a first-time buyer. You can actually get into the market for a duplex or a townhome if you're a real estate investor, so it has affordability. And then finally, there isn't too much new supply. If you watch my channel, you'll see that I harp on this a lot. Markets with lots and lots of new permitting and construction, those markets have a lot of downside risk to real estate if you buy now. San Antonio is not one of those markets. It does not have too much new construction relative to the growth that it's experiencing. So what I'm going to do in this video is show you guys the relevant real estate and demographic data on the San Antonio real estate market. You're going to get a good sense for how much it costs to buy a home or an investment property in San Antonio, and you're going to get a good sense for which micro locations within San Antonio, which neighborhoods, which zip codes have the best real estate appreciation in the past, and which ones are going to have the best appreciation potential into the future. Before we get in the video, please make sure to like the video. That helps this video get seen by more people, so I can help share this data with more people. Please also make sure to subscribe if you haven't done that yet. I love providing this data for you guys. It just makes it easier for me to do that if you can interact with the video, like it, subscribe, leave a comment, let me know your thoughts. Do you agree with me? Do you disagree with me? And if you live in San Antonio especially, I want to hear what you think about the best areas to buy. All right, let's get into it. So San Antonio is definitely the little brother to Austin, right? These cities are 1 hour drive apart from each other. Austin's 1 hour north of San Antonio. And San Antonio, actually, despite being a little bit larger than Austin, really gets lost in the shuffle in terms of real estate discussions. Austin just dominates headlines, and for good reason. Tesla is opening up a gigafactory there. Oracle is moving their headquarters from San Jose to Austin. Joe Rogan just moved to Austin. For these reasons, Austin's in the news constantly and has a lot of really legitimate growth. San Antonio does not have that same type of top-level attention, hype, and growth. It is not a tech hub. There's not a lot of corporate relocations there. But what it does have is slow and steady incremental growth. And why that might not be overly exciting to people, like, it's more exciting to invest in a market where Tesla's going, right? Incremental growth can be better in some cases because it goes more under the radar and prevents the market from getting priced out. There's a lot more real estate investors trying to buy in a place like Austin than there are in San Antonio right now. And as a result, prices in Austin are being bid up, whereas prices in San Antonio are much more reasonable. And you can see the comparison in affordability between Austin and San Antonio on this graph. Austin is the green line, San Antonio is the blue line, and we're looking at the typical home price in each metro area over the last 20 years. And it's evident that Austin has always been more expensive than San Antonio. However, you can see that the gulf between the two is widening significantly over the last 10 years, and especially the last 5 years. Austin now, the typical home price is over $400,000. Meanwhile, in San Antonio, it's $226,000 for the typical home in the market. So what that means is that if you're a home buyer, a first-time buyer especially, you have a lot more options in San Antonio. So what that means is that if you're a home buyer, especially a first-time buyer, you're going to have a lot more options that fit your price range in San Antonio. In Austin right now, basically the market's crazy. You're having to compromise on what you want. You're having to overpay. San Antonio is not that way. Things are much more stable, and there's a much bigger pool of properties to buy from. So of course, if you're a home buyer, you have a better chance of finding something that matches your desires in San Antonio. Now, if you're an investor, it's much the same. If you're looking to buy an investment property in San Antonio, you're going to have an easier time finding a property that fits your budget. And I mean, hey, you can go into San Antonio. If you have $450,000 to play with, you can go into San Antonio and buy 2 properties right now, whereas in Austin, you could only buy 1. So affordability is extremely important. There's the one thing you cannot change in terms of your real estate investment is the price you pay up front. If you pay a high price up front, if you pay an inflated price up front, that is going to lower your returns in the long run. Right now, we're in the 9th or 10th inning of a real estate expansion. Real estate prices have been going up now for over a decade. They've gone up a lot in the last year, and it's likely that that growth is going to abate or even go into decline in the next year or two. So if you're buying a real estate property right now, you really got to think about the price you're paying and if it's worth it for the asset you're getting. And there's also an additional component to this for investors, right? So I talk to a lot of you guys out there and you say to me, Nick, I'm looking to buy an investment property. I want to buy a home and rent it out. I want to buy a duplex, live in one unit, rent the other one out, or maybe I just want to buy a small multifamily property. And if you're one of these people, the price you pay matters a lot because you're going to be looking at your rental yield. That's basically how much income and revenue you generate from the property relative to what you paid for the property up front. And the good thing in San Antonio is that because prices are low, it offers you better annual yield on your investment property. So for instance, in San Antonio, according to data from Zillow, the typical rental unit goes for about $1,300 a month, right? So $1,300 a month, that's around $16,000 a year. Now, the typical home price in San Antonio is $226,000. So if you divide 16,000, which would be your annual revenue, by 226, that's a revenue yield of 7.1%. Now, of course, you're going to have additional expenses on top of that. You're going to have property taxes, insurance, and your mortgage interest. But 7.1%, that's your revenue yield in San Antonio, and that's pretty good. That's pretty good for 2021 in a low interest rate environment to get that type of revenue yield. Now, compare that to somewhere like Austin, where the monthly rent is around $1,500 a month. That's $18,000 a year. And the typical home price is $400,000. That calculation yields a rental yield of 4.4%, which is minuscule. And when you layer on additional expenses in Austin, like property taxes, insurance, and your mortgage interest, you are not going to make money in terms of cash flow on your investment. So if you're a real estate investor, paying a lower price up front gives you a better yield off the bat. That is great for your returns. You're going to be putting money in your pocket right away, as opposed to saying, oh, I need to bank on further appreciation, as is in the case of Austin. I need to bank on further appreciation to make my investment worthwhile. So if you care about your returns, if you care about long-term growth, it's better to buy in a market like San Antonio that's more affordable. Now, of course, there's an additional thing we need to take into account here, and that is the supply situation, right? Because as I love to say, real estate is about supply and demand. So we need to look at how many new units are being permitted for construction in a market like San Antonio, because that's going to influence the housing supply and demand dynamics down the road. When a permit is pulled today for a new home or a new apartment building, it typically takes 1 to 2 years to get built. So by looking at permits pulled today, you get insight into what the inventory situation is going to look like in a year or two, right? So you're kind of getting this window into future supply. So that's why you need to look at the permit situation to make sure you are not investing into a market or buying a home in a market that's going to have all of a sudden a deluge, a glut of inventory that's going to come out of nowhere, that's going to leave your investment less valuable, and it's going to make it harder for you if you're an investor to rent your unit. And what we're looking at on this graph is a data point that I call permit percentage. And let me explain what that is. Permit percentage is taking the permits pulled in a market over the previous 12 months and then dividing it by the amount of jobs in that market. So for instance, San Antonio through January 2021, 18,500 permits were pulled over the previous 12 months. There's about 1 million jobs in the San Antonio metro. That's a 1.8 permit percentage. Houston, you can see, is a 2.4 permit percentage with 73,000 permits on almost 3 million jobs. And then Austin is all the way up here, 45,000 permits on 1.1 million jobs. And why I get comfortable with San Antonio on this graph is because you could see that it's permitting much fewer units than certainly Austin, and also a market like Houston. So San Antonio is not permitting as much new housing inventory as other markets in Texas. That gives you a certain level of security if you're buying a home or an investment property in San Antonio. You know that you're just not going to get railed by all of a sudden there's going to be all these new subdivisions and developments that are just going to result in lower returns for you going forward because the inventory will go up. Now, that doesn't mean we're totally out of the woods in terms of new supply in San Antonio. You could probably notice on that graph over the last year or so, there has been an uptick in permits in San Antonio, and that could cause some softness in the market going forward. However, it's just not on the same level as a place like Austin that's permitting literally 3 times as much new housing as San Antonio. It's going to be hard for a market, if it's around 1.8% permit percentage, it's going to be hard for a market to get hurt too badly by all the new supply coming online. Now, of course, the next step, once you figure out, all right, I'm comfortable with a market, San Antonio seems like a place where I could invest, it has good growth, it has affordability, there's not too much new supply, then you need to really ask yourself, what area within San Antonio is a place I want to buy? And that's really could be a complicated and loaded question. The San Antonio metro area is massive, right? Lots and lots of land area, lots and lots of neighborhoods, different cities, lots and lots of different places that you can go if you're a home buyer or an investor looking for appreciation. So it's important to just get a sense of what does the price appreciation situation look like across San Antonio, right? How much are home prices going up in general, and then how much are they going up across different zip codes? This is going to give you clarity in terms of understanding where the growth is, and the next step is where the growth is going to be in the future. So the first thing we're going to want to do is get a sense of how much it costs to buy a home in the different parts of town. And so what this graph does is it looks at every zip code in the San Antonio metro. You can see the metro covers a big area. I wasn't lying. And the greener the zip code looks, the more expensive the homes are. So for instance, 78132, this is in New Braunfels. The typical price of a home is $451,000. That's very high for the San Antonio metro. However, if we go to a place like 78207, which is closer to downtown San Antonio, the typical price of a home is $100,000, right? So there's massive differences across the metro area in terms of affordability, and understanding the lay of the land here is very important. Obviously, what jumps out here is that northern San Antonio, the northern part of the metro, we're seeing the highest home prices, right? Pretty much everywhere north, it's $450,000, $513,000, $680,000, $458,000. These are really the concentrated areas of wealth, large homes, newer homes, expensive homes in San Antonio. Then if we go deeper into the urban core, especially kind of to the southwest of the city, that's where we see much more affordability, much poorer areas, a lot more poverty in these zip codes. 78273, typical price of $115,000. 78226, typical price of $130,000. 78211, typical price of $125,000. And really, if you just, the further south you go, the affordability just really kind of keeps going, continues. Also, east part of San Antonio, a lot of affordability. So what I want you guys to remember from this map is that northern part of the San Antonio metro, that's where the wealth is, that's where the expensive homes are. More concentrated towards the urban core, west, southwest, and east, that's where the affordability is. And this is a really important thing to think about in terms of your budget, right? You likely have an idea of how much money you can spend on a home or investment property. You're going to want to start gearing that decision-making process based on, is this area affordable for me? Is it not? Is it too expensive? So you need to know what the affordability situation is in the areas that you're looking to buy. Now, the other thing you need to know is what's the growth and appreciation situation. And one trend that we have seen, if you've watched my videos, you see this in almost every single video, is that over the last 5 to 10 years, it's been the poorest, most poverty-stricken areas of different metro areas that have seen the most appreciation. So the poorest areas have seen the most appreciation, and then actually the most expensive, richer areas have seen the least appreciation. And that is a trend that also holds in San Antonio. And you can see that identified on this map. So we're back to the San Antonio metro map with the zip codes, but the color scheme has now changed. Green now means high appreciation, high value growth. Blue means low appreciation, low value growth. What you can see is basically the map coloring is flipped. All these areas to the north that were green before because they have high prices are now blue. You can see 78261, this zip code appreciated by only 16% over the last 5 years. 16% over 5 years is actually right around or even slightly less than inflation. So if you're around 16% over 5 years, you're not really making money on your real estate investment through appreciation. 78257, 13% appreciation over the last 5 years, also not very good. 78258, 18% appreciation over the last 5 years, also not very good. Now, if we zoom in to the more urban areas of San Antonio, we can see a lot of lime green here. And what is lime green here? That means growth. So 78210, prices went from 98,000 to 170,000 over 5 years. 76% appreciation over 5 years. That's unbelievable. 78204, 70% appreciation over 5 years. 78202, 90% appreciation over the last 5 years. You can actually see this little blue dot here is downtown San Antonio. Interestingly, downtown San Antonio, despite the fact that it's surrounded by all of these high value appreciation areas, it actually had pretty low appreciation, 16% over the last 5 years, likely because you can see typical value here much higher, 435,000. It's pretty high for San Antonio. But obviously what a real estate investor or home buyer wants to know is not what happened in the last 5 to 10 years, but what's going to happen over the next 5 to 10 years, right? We can't just simply extrapolate out that appreciation that we've seen and say that, oh, those same areas in the center to the south of San Antonio are still going to do so well. And I actually think those areas might struggle in the future because one of the trends that we've seen over the last couple cycles is that it's actually the poorer zip codes, the lower price zip codes that tend to be more volatile. So in a housing expansion, in an economic expansion, they'll see the biggest price increases, but then they'll get hit the hardest when things do go down. And so I would not necessarily recommend investing in those high appreciation zip codes just on the basis of they had good appreciation. What you really need to do is have a multi-pronged approach, right? You need to say to yourself, all right, what's good for growth? What do people like? What do I like in terms of where I want to live or where would I want to own an investment property? And there's a lot of consistent themes there. Most people want to see an area that's walkable. Walkable areas have done disproportionately well over the last 10 to 15 years in terms of their price appreciation. Additionally, areas that are dense do pretty well. Dense areas, in dense areas, it's harder to build new housing. Right? So if you're in a dense location, you're not going to just see new homes go up to the left and right of you. Whereas if you go out to a place like New Braunfels, not a lot of density, they're just throwing up new homes left and right. So area that's walkable, an area that's dense. You also want to see income growth. You want to see that in your neighborhood, there's strong income growth. The residents there, whether they be old residents or new residents, are earning higher incomes because ultimately local income levels are what's going to determine true long-term price appreciation. And then the final thing you want is affordability, right? You want a location where you could still buy what you think is at a discount to what the fair value is in the market. So if you apply walkability, density, income growth, and affordability, you have a pretty good chance of finding the markets that are most destined for future growth. Now, if you want help doing that, if you're a home buyer, real estate investor looking into San Antonio, and you want to really drill down and find out what are the best areas for growth, and you want to look at those variables that I just mentioned, please contact me. Go to www.reventureconsulting.com. There's a link in the description as well, and submit a contact form. Leave your name, email address, fill out the questionnaire, and a brief description about what you're doing in real estate, and I can get back to you. Basically, I provide one-on-one coaching that will allow you to understand the data, see what the best locations are, see where the income growth is, and allows you to make a better decision. So go to www.reventureconsulting.com, submit a contact form, and I'll get back to you and tell you about my coaching services. Please also follow me on Instagram. If you're enjoying this content but are disappointed that I only post videos twice a week, well then follow me on Instagram. I post content every single day. I post a new graph or map every single day on different real estate markets. I also post stories of me explaining what this data means every single day. So if you want to see more of this content, follow me on Instagram at reventure_consulting. That's at reventure_consulting. And of course, please make sure to like the video. Please subscribe. Please comment on the video. I want to hear your feedback. And until next time, this is Nick from Reventure Consulting signing off.